Many people believe that keeping money saved in the bank is the safest way to protect the future. After all, the word savings sounds comforting, doesn't it? It gives the impression that the money is sitting there, protected, waiting for the right moment to be used. But here's the harsh truth: the bank is not your friend. When you deposit your money in savings, it seems like it's growing, but in practice, it's nothing but an illusion. The bank takes your money and lends it to other people or companies, charging very high interest rates. And what does it give back to you? Almost nothing, just a few crumbs that barely keep up with inflation. It's as if you handed over a whole cake to the bank and in return received only a few crumbs back. Robert Kiyosaki always warns, those who leave money sitting in savings are being deceived by a false sense of security. It's as if you put your money inside a drawer and, while you believe it's saved, its real value decreases each year because the prices of things increase. What today buys a full cart at the supermarket, in a few years might not even pay for half. That's the big trap. The person thinks they're being prudent, but they're actually being sucked dry by a system that profits from the naivety of those who don't know the language of money. The bank grows, but you don't. That's why the first lesson is clear. Don't trust that savings will keep you secure. The bank may seem welcoming, but remember, it's always working for its own profit, not for yours. Imagine you have $10,000 saved in a savings account. Seems safe, right? But here's the problem. If annual inflation is 5%, in a year, you'll still have the same $10,000 in the bank, but the real purchasing value will be equivalent to only $9,500. In other words, your money lost $500 in purchasing power without you even touching it. Now think long term. In 10 years, those same $10,000, if left sitting there, will have the purchasing power of only about $6,000. It's as if you left the money on the table and someone kept taking a piece every year, except that someone is called inflation. The rich know this. They don't leave money sitting, they put money to work. How? By investing in funds that yield above inflation, buying American government bonds, treasury bonds, investing in index funds, ETFs, that track the stock market, or even in private assets that generate real returns. That's why Kiyosaki insists, the first step to getting out of poverty is not earning more, but learning to put money in places where it grows faster than inflation. The rich multiply, the poor just save. Robert Kiyosaki always reminds us, salary pays the bills, but doesn't build fortune. What really changes the game is what you do outside your work hours. That's where the idea of side businesses and digital assets comes in. Think of someone who earns $3,000 per month at their job. That amount might seem sufficient to survive, but it will hardly be the path to wealth. Now imagine that same person decides to use their nights and weekends to create a side business. It could be an online store on eBay or Amazon, selling imported products they bought at low prices and resell for profit. With dedication, this business could yield an extra $500 per month. But it doesn't stop there. If this person creates a digital course, an ebook, or even a monetized YouTube channel, they could generate recurring income that grows over time. For example, an ebook sold for $10. If they sell just 10 copies per day, that already represents $3,000 per month, the same as their salary. The big difference? That ebook was made once and can be sold forever, without additional cost. This is what Kiyosaki calls a digital asset, something you build once and that continues putting money in your pocket even while you sleep. Another simple example is affiliate marketing. Imagine recommending a $100 product and earning a 10% commission. Seems little, just $10. But if 200 people buy through your link in a month, that turns into an extra $2,000. And all this without inventory, without delivery, just connecting buyers and sellers. The secret is in this mindset. Continue working full-time at the job that pays the bills, but dedicate a few hours a day to building assets that grow on their own. It's like planting a tree. At first, you water and care for it, but after a while it grows and bears fruit every year. That's why those who want to become millionaires in 2025 cannot depend only on salary. You need to create parallel income sources that, when added together, form solid wealth. The digital world has opened doors that didn't exist before. Anyone with a computer and internet access can start building their own fortune today. One of the biggest differences between the poor, middle class, and rich is not just in the amount of money each one has, but in the language they use. While the middle class talks about salary, installments, and monthly bills, the rich talk about assets, dividends, cash flow, and passive income. Robert Kiyosaki states, "If you don't speak the language of money, you'll spend your whole life working for those who do." And this is true. Think of someone who receives $4,000 per month and spends almost everything on rent, finance car, and credit card. This person talks about how to pay debts, how to save for the next vacation, but never talks about multiplying wealth. Now look at the investor. They think differently. This property can give me $200 per month in net rent. If I buy 3 of these, I already have $3,600 per month in passive income, almost the same as many people's salary. Meanwhile, I continue reinvesting the profits. It's a mindset change. Those who only talk about salary live limited to what the boss pays. Those who talk about assets learn to create a system where money works for them. It's as if there were 2 conversations happening in the world. One of those who survive and another of those who prosper. Learning the language of money is like learning English or Spanish. At first it seems complicated, full of new terms, but the more you practice, the more natural it becomes. When you understand what cash flow is, when you know how to differentiate asset from liability, when you start thinking in terms of return on investment, ROI, your mind opens up. The middle class asks, "How much do you earn per month?" The rich ask, "How much are your assets yielding this month?" This simple difference in vocabulary reveals a person's entire financial future. Those who only talk about salary will never see beyond the next bill. Those who talk about assets build freedom. This is one of the most controversial points in Robert Kiyosaki's teachings. He says, without fear of contradicting the majority, your home is not an asset. And when someone hears this for the first time, they usually get shocked. What do you mean? I spent my whole life believing that buying my house was the biggest investment of my life. But let's look calmly. Imagine you buy a house in the United States for $300,000. At first, it seems like an achievement. Finally, the dream of home ownership. But what happens next? You start paying the financing. If the bank charges 6% per year in interest, after 30 years, the house will have cost more than $550,000. Besides that, every year you pay property taxes, let's suppose $4,000 annually. There's still maintenance, roof that needs repair, plumbing that breaks, new paint. Easy to spend $2,000 per year just to keep the house in good condition. In other words, instead of putting money in your pocket, the house takes money out of your pocket every month. It doesn't generate income, it generates expenses. And that's exactly why Kiyosaki states, your residence is not an asset, but rather a liability. Now compare this to another situation. Instead of buying a house to live in, you buy an apartment to rent out. Suppose this apartment also costs $300,000, but you put it on the market for $2,000 rent per month. Throughout the year, this generates $24,000 in gross revenue. Even discounting taxes and maintenance, let's say $18,000 net remains in your pocket. This property pays for itself and still generates extra income. See the difference? In the first case, you bought a house that brought you pride and comfort, but also a series of costs. In the second case, you bought an asset that works for you. Financial freedom doesn't come from the house where you live, but from the income that allows you to choose any house to live in. True security is not in having a fixed address, but in having assets that pay for your lifestyle month after month. Kiyosaki insists the middle-class mentality is to dream of home ownership. The rich mentality is to dream of assets that pay for several homes, preferably without them having to work for it. When most people hear the word debt, they automatically think of something negative, a problem, a headache. But Robert Kiyosaki teaches us that not all debt is bad. In fact, there are two types of debt: those that impoverish you and those that can enrich you. Bad debt is that which you assume to buy things that lose value or don't generate any return. For example, a $40,000 car financed over 60 months. The moment you drive the car off the lot, it's already worth less, and every month you pay interest to the bank. Result? The car keeps losing value while your debt increases, spending $5,000 on credit card for clothes, electronics, or a vacation trip. It might even bring momentary pleasure, but this debt charges very high interest, often 20% per year or more. And the worst part, when the vacation ends, only the bill to pay remains. Good debt, on the other hand, is that used to acquire assets that generate income. For example, you take a $200,000 financing to buy a small rental property. If the monthly payment is $200, but the tenant pays $600 in rent, it means the property itself is paying the debt. Besides that, there's $400 left over per month in positive cash flow, which goes straight into your pocket. Another example, borrowing $50,000 to open a business that generates $2,000 net profit per month. In just over 2 years, the business already pays off the entire loan and continues generating income. That's the fundamental difference. In bad debt, you work for the bank. In good debt, the bank works for you. While the middle class avoids talking about debt or drowns in it to sustain a lifestyle, the rich learn to use the bank's money as leverage. They understand that if the asset yields more than the cost of debt, that debt becomes a growth tool. Kiyosaki summarizes this simply. The poor buy liabilities with their own money, the rich buy assets with other people's money. The truth is that the educational system prepares people to be good employees, but not to become investors or business owners. From early on, we learn to study, get grades, follow rules, but we're almost never taught to deal with money intelligently. That's why so many people enter what's called the rat race. They work hard, receive their salary, pay bills, get into debt, and at the end of the month, the cycle starts over, and they spend their whole lives believing this is normal. Robert Kiyosaki insists that the way out is not in studying more to get a promotion, but in seeking real financial education. This means learning to differentiate assets from liabilities, understanding how money multiplies, and making decisions that create freedom instead of just temporary security. Those who seek this knowledge begin to see opportunities where others only see risks. They learn to think independently and stop depending only on salary to survive. This is the key to getting out of the race and building a future of choices. Maybe you're thinking, but is there still time for me? Can I change my life now? The answer is yes. It doesn't matter if you have $100 or $1,000 or $10,000 available. What matters is your next step. The rich didn't start rich. They started with different decisions. While some saved money in savings accounts, others sought to learn about assets. While some spent on bad debt, others used the bank's money to build wealth. What defines your future is not the size of your salary today, but how you decide to use it. Each dollar can be a seed. If you plant it in the right place, it grows, multiplies, and over time starts working for you. The key is simple. Don't live only on effort, live on strategy. Working hard is important, but working hard with intelligence is what transforms an ordinary life into a life of abundance. Financial life is like a journey. Some always walk in circles, trapped on the same path. They receive their salary, pay bills, get into debt, wait for the next payment, and so years pass. Others, however, discover that there's a way out, and this way out is not in working more hours, but in learning to make money work for them. Robert Kiyosaki always says that the difference between those who stay trapped and those who achieve freedom is mindset. It's what you decide to believe and practice every day. It's no use earning $5,000 per month if everything is spent on bad debt and immediate consumption. Likewise, someone who earns only $2,000 can start building wealth if they learn to plant seeds in assets, digital businesses, or small investments that beat inflation. The transformation begins within you. It's when you start to see each expense as a choice. Will this bring me closer to or further from my freedom? It's when you start replacing phrases like "I can't" with "How can I?" This mindset change opens doors that previously seemed impossible. And here's the most motivating point. There's no age limit to start. I've seen people who spent 30 years living only on salary, and when they decided to learn the language of money, in a few years completely changed their lives. What's important is not where you are today, but where you're deciding to go from now on. If you look back, you'll see that much time has already passed. But if you look forward, you'll realize there's still room to plant, grow, and harvest. Wealth is not a privilege of the few. It's a daily construction of those who dare to change the course of their own story. Many people spend their lives waiting for the perfect moment to start. When they have more money, when debts are finished, when there's spare time. But the truth is that this moment never comes. There will always be a new bill, an unexpected worry, an excuse to postpone. The rich don't wait for the ideal moment, they create the moment. They know that even $100 well invested can transform into something much bigger over time. The secret is not in starting big, but in starting right. Imagine if you had invested $500 in a digital asset 5 years ago and it was generating just $50 per month in return. Seems little, but think that in 5 years you would have already recovered the initial investment and still have constant income coming in without effort. Now multiply that by 10, 20, or 50 different assets. This is how freedom is born. The point is, with every dollar spent on something that loses value, you're building a wall that keeps you away from wealth. With every dollar invested in something that generates return, you're building a bridge to freedom. The future doesn't depend on the government, the boss, or luck. It depends on your decision to learn, act, and build. And the good news is that this decision can be made today, even before the video ends. The biggest obstacle that separates someone from financial freedom is not the size of their salary, nor the opportunities that appear, but rather the way of thinking. While many say it can't be done, the rich ask, how do I make it work? This simple mindset change opens doors that previously seemed locked. Think about how many times you've believed that only millionaires could invest, or that you needed to inherit money to start. This belief is what keeps many people stuck, but the truth is that every millionaire was once an ordinary person who decided to look at money differently. They started by buying small assets, reinvesting, learning from mistakes, and little by little building their fortune. The turnaround happens when you understand that each dollar can be a silent worker. If you spend it on liabilities, it disappears. But if you invest it in something that generates return, that dollar starts bringing others to your pocket. And the more workers you have, the faster you achieve freedom. It's not about winning the lottery, nor about waiting for a raise at work. It's about using what you already have strategically. When you learn to think like an investor, the world stops being a place full of limits and becomes a field full of opportunities. Financial freedom doesn't happen overnight, but it's also not a distant dream. It's built step by step, like a wall erected brick by brick. Each right choice you make today is one more brick placed in the future you want to live. It's easy to feel discouraged when we look at the size of the journey. Maybe you think, I earn little, or I'm full of debt. But the central point is not where you are, but the direction you're walking toward. If until now you were walking in circles, this is the moment to turn the wheel and start moving forward. Imagine that, instead of spending $300 per month on things that lose value, you direct that amount toward assets. In 5 years, that wouldn't just be savings, it would be the beginning of wealth that grows on its own. This is how the rich think. Each small step is a planted seed, and each seed over time becomes a fruit-bearing tree. Life will always offer two options. Continue in the same cycle or start building something new. Those who choose the first path live on effort, always running behind. Those who choose the second start living on strategy, letting money do the heavy work. And here's the great motivation. You don't need to change the whole world, nor take a giant leap. You just need to start. Start small, but start right. Because with each month, each year, each decision, you'll be moving away from the rat race and approaching the freedom you've always dreamed of. There comes a moment in life when everyone needs to make a decision. Continue repeating the same cycle or take control of their own financial destiny. This is the crossroads where many stop. Some choose apparent security, continue working just to pay bills, accumulating bad debt and dreaming of a retirement that might never bring peace. Others, however, choose a different path, that of freedom built step by step. Robert Kiyosaki teaches that true wealth is not in earning more overtime hours, nor in depending on a raise from the boss. It's born when you change your mindset and decide to invest in what generates return. It doesn't matter if you start with $50, $500 or $5,000. What matters is planting the right seed. Each asset acquired, each knowledge learned, each good debt used intelligently becomes a powerful tool. It's as if you were assembling a silent army of small workers, dollars that go out every day to bring more dollars back. The more this army grows, the freer you become. And here's the secret. Freedom is not a prize reserved for the few. It's available to all who have the courage to start. The difference between those who get there and those who stay on the path is not luck, but decision. So the question is not, is it possible? The question is, when will you decide to take the first step? After this journey, one thing is clear. Wealth doesn't come from salary, but from the assets you build over time. The bank is not your friend, savings don't protect your money, and home ownership doesn't guarantee freedom. What really transforms lives is investing in assets that beat inflation, creating side businesses, learning the language of money, using good debt intelligently, and above all, seeking real financial education. Robert Kiyosaki always repeats, freedom is not the result of luck, but of the discipline of those who decide to plant today to harvest tomorrow. Each dollar invested in an asset is like a seed thrown into the earth. At first, it seems small, but over time, it grows, bears fruit, and generates abundance. And remember, it doesn't matter if you're 25, 45, or 65 years old. The right time to start is now. The financial future you desire is in your hands, and each decision you make from today on can bring you closer to or further from the freedom you dream of so much. So I invite you, if this video opened your mind and showed you a new path, click like and subscribe to the channel. This way, you help me continue bringing content that transforms lives and ensure you won't miss the next teachings. Your freedom begins with one step. And that step can be taken today.